They told you the silver move was just a trade. They told you it was just momentum. They told you it was just another spike that would fade the moment the headlines changed. That was the story, right up until governments started using the words national security. Because the second a metal becomes a national security problem, it stops being a normal market. It becomes a battlefield. And right now, silver is being pulled into that battlefield from every angle at once. The fight isn't on your screen, it's in the supply chain. Welcome back. I'm John A.G., and this is Silver&Golden Signal Lab. Stay with me now. Here's what happened. The world hit a debt wall, silver demand surged into overdrive, and the system is starting to respond like it's dealing with an emergency, because it might be. Now listen carefully, because this is the part almost nobody understands. The debt story is not only an American story. Yes, the United States is drowning in deficits. But you're seeing the same pattern in the UK, in Europe, in China, everywhere. And the pattern is deadly simple. These governments want to keep spending, but they can't keep borrowing at the same pace without consequences. They've already maxed out the credit card. They've already pulled demand forward. They've already inflated the cost of living. So what happens when the engine that powered the last decade starts choking? You get instability, not just economic instability, political instability, social instability, market instability. And metals like silver don't rise in that environment, they get hunted. That's why the silver rush feels different right now. It's not just investors trying to get rich, it's people trying to get out of the blast zone. Let's talk about price action, because it matters, but not in the way you think. Silver has been ripping higher at speeds that destroy people's belief system. 5 days, double-digit gains. 1 month, violent upside. 3 months, insanity. A year, the kind of chart that makes pensions look like a joke. And if you're watching this thinking, I missed it, here's the truth. The move isn't about what already happened. It's about what happens next when the world realizes there isn't enough metal to satisfy the new rules. Because the price you see on your screen is not the full cost of silver. The paper number is a headline. The real number is spot plus premium plus availability plus delivery time plus restrictions. That's the real price. And that's exactly why the physical market is starting to behave like a separate universe. Here's the proof. Major dealers are changing the rules in real time. Minimum buybacks, minimum online orders, new thresholds, new friction, new delays. That is not normal behavior in a healthy market. That is what companies do when demand is too aggressive, inventory is too tight, and the risk of being cleaned out is real. And if you've never lived through a real commodity squeeze, you need to understand something right now. The squeeze doesn't start when the news reports it. The squeeze starts when the rules change. When they introduce minimums, it's not policy. It's a pressure valve. And it's telling you the same thing the charts are screaming. There's too much demand hitting a pipe that can't widen fast enough. Now, some people are buying huge amounts. Others are buying slowly. Some are stacking aggressively. Some are just trying to get a few ounces in hand to learn how this works. Whatever lane you're in, the lesson is identical. Physical is about control. Paper is about exposure. And the system wants you to confuse those two things. So let's cut through the noise. Physical silver is the object, the atom, the metal you can hold, store, and keep outside the banking grid. Paper silver is a promise, a contract, a bet inside the system that can be changed, paused, repriced, or settled in ways you don't control. That's why the emotional battle matters so much, because the market punishes emotion, and it rewards preparation. If you've ever watched silver spike and then slam down, you know the feeling. Your heart rate changes, your hands get restless, you start checking the chart like it's oxygen. That reaction is exactly what the system is designed to trigger. Because when you're emotional, you're predictable. When you're predictable, you're tradable. And when you're tradable, you get harvested. So here's the upgrade you need. Stop watching silver like a slot machine. Start watching it like a stress test. The ups and downs are not random. They're a test of confidence. They're a test of liquidity. They're a test of who panics first. And right now, confidence is cracking in places people assumed were untouchable. Let's shift into the part nobody can ignore. Government action. Less than a week ago, policy language hit the public that should have made every serious investor sit up. It wasn't about metals. It wasn't about markets. It was about processed critical minerals and derivative products being imported in quantities that could threaten national security. Read that again. Threaten national security? That phrase is a flare. It's a warning label. Because once a government frames a material as critical for defense and infrastructure, it gives itself permission to do things that would be unthinkable in a normal market. Price floors, import adjustments, emergency controls, supply chain pressure, strategic stockpiles, priority allocation. In plain English, it means if silver becomes essential to defense, energy, and data infrastructure, the public does not get first priority. Industry does, and national security always wins. Now, I'm not here to scare you with fantasy. I'm here to show you the logic of the machine. Silver is not just jewelry. Silver is used across critical systems, electronics, power grids, military hardware, advanced communications, satellites, precision components, and the modern tech stack that runs everything. And here's the part that makes this story explosive. It's not just government demand, it's the private sector too. AI data centers, energy systems, EV supply chains, battery research, high-efficiency electrical components. So, while people argue online about whether silver is money or industrial, the world is quietly turning it into both at the same time, which creates a perfect storm. A shrinking pool of available metal meets a growing list of mandatory uses. And that's how you go from investment thesis to allocation crisis. Now imagine this. A government recognizes it needs a resilient supply chain. It recognizes it relies on imports. It recognizes rival nations control key processing routes. It recognizes demand is rising faster than mining can respond. So what does it do? It builds a stockpile. It negotiates trade constraints. It creates floors and limits. It starts treating silver like a strategic resource, not a consumer commodity. That's when the market changes character. That's when the chart stops behaving like a chart and starts behaving like a weapon. And that's why the silver rush has a completely different energy right now, because in the background, something else is happening. The traditional price suppression narrative is being replaced by a new problem: price discovery. When suppression breaks, price discovery is not gentle. It is violent. It is a spring uncoiling. It is the moment a long-held lie collides with immediate reality. And if the real-world delivery system cannot keep up, the paper structure starts to wobble, which brings us to one of the most uncomfortable facts in this entire story. Delivery, not opinions, not tweets, not vibes. Delivery. Because paper markets can show liquidity right up until the moment somebody stands up and says, "No, I want the metal." That's when numbers become objects. That's when contracts become headaches. That's when inventories become a countdown timer. And if you've been paying attention, you've seen the reports. Large delivery volumes, registered inventories shrinking, the clock ticking down toward levels that make people nervous. Here's the key point. When inventories are tight, time becomes a price factor. If everyone wants metal now, but the pipeline delivers later, the premium becomes the bridge. And premiums are telling you the truth that spot cannot. So ask yourself this. If silver is so available, why do the rules keep tightening? If silver is so plentiful, why do minimum orders appear? If this is just a normal bull market, why does it feel like supply is being rationed? Now, let me ask you something directly. Do you think the average person understands what happens when a critical material becomes scarce? Or do you think they only understand after the shelves look different? Because history says the public wakes up late. They wake up when the limits are visible. They wake up when shipping delays become headlines. They wake up when premiums become insane. They wake up when the word out of stock appears where a buy button used to be. And that is why the first phase of a rush is quiet. The second phase is denial. The third phase is panic. Which phase do you think we're in right now? And what phase do you think comes after governments start openly referencing critical mineral threats? Now, I want to address something that's hiding inside this entire silver conversation: the debt wall. Because the real why behind this rush isn't just metals, it's trust. When debt gets too large, it stops being a math problem and becomes a legitimacy problem. People stop believing the promises can be kept. They stop believing the budgets are real. They stop believing the numbers. They start looking for exits. And when enough people look for exits at the same time, everything reprices. Currencies, assets, real estate, stocks, and yes, precious metals. This is why silver reacts so aggressively. Silver is a pressure gauge, and pressure right now is building on every side. Deficits bigger than people can comprehend. Debt ratios that historically only appear during war. Governments trapped in spending habits they can't unwind without backlash. Inflation that already burned the public once and could burn them again. That's a recipe for revaluation. Not because someone wants it, because the system needs it. If the purchasing power collapses, you either pretend everything is fine or you reset. And when you reset, the things outside the system become priceless. Now, I'm going to say something that will trigger some people. Silver isn't only a trade, it's also a referendum. A referendum on whether you believe this debt story ends politely, or whether you believe it ends the way history usually ends, with a change in rules. And when rules change, the people who prepared early are calm. The people who waited are angry. That's not ideology, that's pattern recognition. You'll hear people say it's over, ignore the noise and follow the flow, demand, access, and policy. So let's get practical. If you believe silver demand is being pulled by industry, defense, and energy systems, then the question is not, will silver be valuable? The question is, will the public still have access at reasonable terms? Those are different questions, and that difference is where the opportunity lives. Now here's where things get even more intense. Crisis of confidence. This is the invisible driver that moves faster than supply and demand charts. Crisis of confidence is what happens when people realize the system is fragile. Fragile banks, fragile inventory, fragile contracts, fragile budgets. It doesn't require collapse, it requires doubt. And doubt spreads faster than facts. That's why a simple rumor can spark a rush. But here's the twist. In this story, you don't even need rumors. The fundamentals are already aggressive enough. Debt is real. Inflation was real. Supply limits are real. Inventory drawdowns are real. Policy language is real. So if confidence cracks, it won't crack because of a meme. It will crack because the machine is exposed. Now, right here is where you have to decide what kind of viewer you are. Are you here to watch the drama, or are you here to understand the playbook? Because the playbook is the only thing that matters. And don't forget, subscribe to support the original work. And if you're part of the movement against copycats, comment John A.G. Best so I can see you. Now, let's continue, because the next part is where the story turns from interesting to dangerous. The perfect storm. On one side, rising demand. On the other side, limited supply. In the middle, a paper system that assumes smooth delivery. And the moment that assumption fails, everything reprices. That's not my opinion. That's how commodities behave when the flow breaks. When you have a 5-year structural deficit, it means you've been consuming more than you replace. You don't notice it at first because you have stockpiles. Then you notice it when stockpiles shrink. Then you notice it when access changes. Then you notice it when the price goes vertical. And the wild part? By the time the public notices, the smart money is already positioned. So if you're watching this thinking, okay, what do I actually do with this? Here's the simple version. Watch the physical market, watch the rules, and stop letting the chart hypnotize you. Now I want to bring it back to a massive misconception. Some people think silver's price is driven by one thing only, like short selling. Others think it's driven only by inventory. The truth is more brutal. The biggest driver is confidence. When people trust that paper contracts equal metal, the system runs. When people doubt it, the system shakes. And when the system shakes, delivery becomes the center of gravity. That is why the language of national security matters. It implies someone important is paying attention. It implies contingency planning. It implies strategic moves that do not require public approval. And if you want to see why this could accelerate, here's the next layer. Currency stress. When debt gets too high, currencies weaken over time because the easiest escape is debasement. Not because politicians love pain, because politicians love survival. Weakening the currency pushes the burden onto the public in a way that feels invisible at first, until it's not, until groceries hurt, until rent hurts, until savings feel useless. Then people demand answers. And if the answer is more of the same, confidence collapses. And silver doesn't need permission to move in that environment. It just moves. Now, I'm going to ask you a question, and I want you to actually answer it in the comments. If the world is drowning in debt and governments can't cut spending without chaos, what do you think is more likely? A clean, gentle fix, or a messy reset? Because your answer to that question determines your strategy. And here's the second question. If silver is becoming essential to energy and defense systems, do you think governments will prioritize cheap silver for the public or guaranteed silver for industry? Tell me what you think, because this is the real debate nobody wants to have out loud. Now let's talk about the psychological warfare you will face as this continues. You will see massive green days. You will see terrifying red days. You will see headlines that tell you the rally is over. You will see experts mocking metals. You will see people trying to shame you for caring. And you will feel tempted to react. That's the trap. Because volatility is a weapon. It creates motion sickness. It makes you doubt your plan. It makes you trade your future for emotional relief. So your job is not to predict the next 5-minute candle. Your job is to hold the correct thesis. And the correct thesis is simple. If a critical material has rising mandatory demand and a constrained supply chain, the long-term outcome is higher price and tighter access. Everything else is noise. Now, I need to say this clearly. The goal is control, not chaos. Build a position you can hold and don't let volatility bully you out of it. Now, the final part of this story is the part most people don't want to imagine. What happens if the system acknowledges scarcity officially? What happens if strategic stockpiles grow? What happens if trade negotiations introduce floors? What happens if deliveries pressure inventories below comfort levels? What happens if the market realizes the available above ground number is not actually available? Then the rush becomes global. And the moment a rush becomes global, it's no longer a price move. It's a behavior shift. People don't buy because they want profit. They buy because they want certainty. And certainty in a debt-saturated world becomes the most expensive thing on earth. So here's what I want you to take away today. This silver story isn't random. It's the collision of debt, policy, demand, and trust. It's the moment the system starts admitting, quietly, that it needs resources secured. And when the system needs resources secured, the public gets what's left. If anything in this video made you connect the dots, hit the like button so more people see it. Subscribe so you don't miss the next update, because this story is evolving fast. And remember, comment John A.G. Best. So I know you're here and you're part of the movement. Take care of yourselves, take care of each other, and I'll see you in the next video very soon.